Here we go. Good afternoon, everyone. I'm Paul Benwell.
Hi, I'm Sophie Caesar. Thanks for joining us for our second part of PBA, A Year in Review.
For those of you who weren't with us yesterday, PBA has had the pleasure of hosting over 40 interesting and diverse companies in the last 12 months. Many of these companies are repeat presenters, and in early 2022, we will be showcasing them, their accomplishments of 2021, and what they have planned for the next 12 months. As well, over the last few weeks, we've reached out to colleagues, financial professionals all across Canada to bring you a list of their top picks for undervalued, oversold, tax loss hit stocks to watch. We will be putting out the list in the coming days. Sophie?
Thanks, Paul. So today's format is going to differ from the usual. We'll begin with Taj Singh, CEO of Discovery Silver, followed by questions. Then Peter Clausi from the recently listed Silver Bullet Mining will chat with us about what they've been up to. And as always, everyone, please ask your questions in the Q&A in the chat. I see that some of you have already started using it, so great.
All right, welcome Taj, welcome Peter. We're going to start with Taj, so whenever you're ready, please go ahead. And please put in your questions in the Q&A box in the bottom, and away we go. Thanks, Taj.
Thank you, Paul. Thanks, everyone. Sophie, I just want to make sure you guys can all see my full screen.
Yep.
Yeah, it's perfect.
Fantastic. Okay. Thank you, guys. I'm Taj Singh, President and CEO of Discovery Silver. We are focused on our Cordero Project, which we believe is one of the most important silver assets in the space right now. We believe it will be the next tier one silver mine. And we really think it's, in terms of value for investors, it's really the early innings of this story, both with silver tailwinds set to really move, but also the actual project, the de-risking and advancing of the project towards construction should really, we believe, service a lot of value. So again, early innings for this project. There will be forward-looking statements in the course of the presentation. And just a quick couple of slides on silver, to set the context. Silver, some say we're in a precious metals bull market. I mean, we clearly are, but it feels like it's on a bit of a treadmill here. But what we want to show here is silver. It lags gold in terms of price movement, but when it does, it really shoots up. These show the past three, and then the current one we're in, precious metal bull markets. You'll see that gold takes off early on, silver then comes in later, and then really in every single bull market we've had in modern history, but just these three looking specifically, silver significantly outperforms gold. And so we're, again, early stages of this last one. Who knows where it's going to go, but if you compare it to the other bull markets we've seen, we're nowhere near the peak yet. Looking at supply and demand, it's important for silver because silver is not only an investment metal, it's an industrial, has a lot of industrial uses as well. You'll see the chart on the left kind of outlines the various uses for silver and the demand that way. The three big ones that are picking up really are solar panels, electric vehicles, and 5 and 6G networks. Those are really growing areas where silver is vital because of its electrical conductivity applications, characteristics actually. So that kind of lays that out. Now, if you just look at the chart on the right, you'll see that by the time, these are provided by the Silver Institute and the data from Silver Institute and BMO Capital Markets, but you'll see by the time we get to 2030, you're going to have almost 200, some say even more, close to 300, based on what studies you look at, million ounce shortage of silver per year. That's 25–30% of total global mine supply. Any way you look at it, even if you don't think of silver going up in terms of an investment case on it, even if silver stayed flat, in terms of an investment demand, simply the industrial demand alone, there's going to be a significant shortage in deficit, which bodes extremely well for silver. So that in and of itself is very, very positive for silver moving forward. And now looking at our story, we have the Cordero Project, which is located in Mexico, the world's largest silver producing nation we're located on a major gold silver belt. So obviously a right place to be. We have the world's largest undeveloped silver project and recently we put out a brand new resource in PEA on the project. That'll be the focus of my discussion. But there's three major things why we talk about Cordero being a tier 1 silver asset and the next most important asset in the silver space. And it's size, margin, and scalability. And in the silver space, they'll have assets that have one of these characteristics. Very rare, you'll get 2 of them. Cordero has 3 of them. And really the one that sets it apart, I think, is the scalability. So first, looking at size, our PEA that was just released outlines 26 million ounces of silver equivalent production over a 16-year mine life, long mine life, big, significant production. You know, it would, at 26 million ounces silver equivalent, it would rank among the top 3 silver mines in the world. And again, over a nice long mine life of 16 years, which could obviously continue to grow. And I'll talk about that in a second. Margin is another thing that's very important. You need that size, you need that long mine life, but with margin. The study outlines the life of mine all-in sustaining costs of $12.35 an ounce. And currently trading at $2.17. Sorry, someone had their mic on. I'm not sure where that came from. But also the NPV to CapEx ratio. So not only is the operating cost extremely favorable, and I'll show how those stack up versus other silver companies, but the NPV to CapEx ratio is very important because it talks to the capital efficiency of the project. And typically a ratio of 1-to-1 is quite good. 2-to-1 is very good. I will say here that we assume a $22 silver price, the NPV to CapEx ratio is 3.2 times. So it's very impressive in terms of capital efficiency. And then looking at scalability, our project is very unique in the sense that most silver projects are vein style deposits. You're either in ore or you're in waste. And you kind of, if silver price goes up, you can't just expand the resource because you kind of have waste on the sides. We have an open pit project, which has a high grade and a medium grade, huge footprints of a high grade, a medium grade, lower grade around it. So as silver price continues to grow, the deposit itself has natural leverage to a rising silver price. So you can continue to make the mine larger and larger and larger, which you really can't get in most silver mines that are underground deposits. And sitting outside of the mine itself is close to 400 million ounces of silver equivalent just in and around the mine plan I've told you about and the numbers I've given you. There's an upside of 400 million ounces of silver equivalent sitting just outside of that, which really, again, gives this some very, very impressive torque. Looking at where we're located, the basics, we are located in Chihuahua State, which is located just below Texas. As I mentioned, it's a very well-known silver producing part of the country. And again, Mexico is the #1 silver producer in the world. We are at the PEA stage, moving swiftly to a pre-feasibility stage. And then beyond that would be a construction decision with a feasibility study. I'll talk about that in a second. The total global resource of the project, I mentioned it is the world's largest undeveloped silver project, is over 1 billion ounces, 90% of which is in the measured and indicated category. So that's important to know because that means the resource has been de-risked very significantly. Obviously, you know, a lot of companies at this stage may have 50%, 60, 70% of their resource in the inferred category. We have 90% of the resource in the measured and indicated category, talking about how advanced this project is, how much it's been drilled. The other point to note here is the strong cash position. We've got over $70 million Canadian in the bank, and that puts us in an extremely favorable position to advance this project up to a construction decision. And then actually a significant portion of the equity capital needed for the build would also be able to be provided. And then this plan map I noted, these are a select few mines that are nearby us, but again, really speaks to the area we're in, that it's very much mining country. And obviously some very big players around here and some very long-lived, robust mines. Looking at the capital structure, You'll see if you look at the shareholder breakdown, about a third is retail, third is institutions, and founders, management, and board account for 10%. Also, Eric Sprott is personally invested in the company. He's in at about 25%. And it is, other than First Majestic, it is his largest position in the silver space. I believe the next two companies, in that kind of top four are Silvercrest and Mag Silver. So obviously, very good company to be in. But Eric is a great shareholder, a very strong silver bull. He believes silver's really ready to take off. And so he often is publicly very supportive of us as being his kind of number one big silver story. So it's great to have him as a very supportive shareholder. You'll notice I talked about kind of funding for the next couple of years. You'll see there's 34 million warrants roughly, all in the money. Those come in next year, next summer. Again, a majority of these, over half, roughly, are held by Eric Sprott. So obviously in very good hands. Other ones are in other institutions who are very strong supporters as well. So those are all in good hands. But this brings in over $40 million next year. So by the time roughly we model, by the time we get to a construction decision, say in about 20 to 24 months time, we roughly believe we'll have about the same cash balance we have now, over $70 million. So again, that takes out a very nice chunk of what we need for the capital for the build. And I'll talk about that in a second. The market cap is in and around 600 million. Since we've put out the resource in PEA, silver has dropped. We have actually hung in extremely well. This price chart isn't updated to cover the past couple of weeks, but we've been doing very well and getting some very good momentum once we release the PEA. So a mine can have all the grade and tonnage characteristics are obviously extremely important or vital, but how about the qualitative characteristics for eventually becoming a mine? Very important. You'll have assets that look great in terms of the geology, the grade, etc., but they're just in such remote locations or in jurisdictions that don't really get mining. I think we believe Cordero definitely ticks all the boxes for eventually becoming a mine in terms of the qualitative characteristics. First of all, the structure is simple. It's 100% owned by us. No JVs, earnings, option agreements. We own 100% of it. Second, very important, is a large land package. So you've got your main pit area here in the red, where the resource is, and around that, you've got 35,000 contiguous hectares around it, completely owned by us. So obviously very important for layout, logistics, and even for other exploration potential, which we'll talk about in a second. The local infrastructure really couldn't be better. Major highway up one side of the property and a power line up the other side of the property. So obvious capital and operating cost advantages. The topography, classic rolling northern Mexico topography, perfect for an open pit. Big open pit, large scale operation. And then it's also located in Chihuahua State. I didn't note it before, but Chihuahua State is one of the most pro-mining states in Mexico. Mexico generally is very pro-mining, but Chihuahua is very strongly pro-mining. They like to push their projects forward and really support them. So it's been we're very fortunate to be located there. And obviously there are so many mines in the state, so it makes sense. And then I talked about exploration potential, but there are multiple property-wide targets already. These orange areas are interpreted intrusive centers, so potential sources of mineralization have already been identified across the property that have similar signatures to what we see at Cordero, and often actually larger in size. I mean, they're going to have to be tested with mapping and sampling and drilling, which we've already done. But we believe there's some very good probability in 2022 of a brand new discovery on this land package, which, if we're able to find a brand new deposit already with what we have, it could really, really drive some very significant value. Looking at the timeline here through 2022, you see we've just put out a brand new resource in PEA within the past few weeks. PEA was about a couple weeks ago. We've continued our phase 2 drilling, which will work to move the project to the pre-feasibility stage. And then our main focus for next year is really permitting, infill drilling in and around the main area, the resource area. And then there are some very high-grade veins that transect the property that are near the pit. We believe these could actually end up being very nice supplemental sources of ore that have much higher grade that could even bring the margins up further. So we'll continue to drill test those and see if there's you know, some further potential with those. They look extremely encouraging right now, and they're in and around the mine area. So we'll be working on those. And then we talked about the property-wide drilling, which we hope will begin kind of Q1 next year in terms of drilling. So obviously lots of news through 2022. A major catalyst would be this pre-feasibility study, which we're estimating for kind of Q3 2022. And then if you move into 2023, I've talked about it before, but about a year after the pre-feasibility is when we're targeting the delivery of a feasibility study and construction decision. So definitely going to be a busy and newsy couple of years. Very quickly looking at the PA highlights, I touched on them previously, but let's dig in just a little bit more. First of all, in terms of the economics, base case silver was assumed was $22 silver. We have an after-tax NPV of $1.2 billion US. In Canadian per share, that works at the $4.62 a share. IRR of close to 40% and payback of 2 years. So very strong base case economics. If you look at the upside, we used 2750 silver. 2750, we got to that. It was the 90th percentile of the 1-year trailing average price of silver. So obviously we've already been at 2750 over the past year for I think several months. But you know, something that's an upside scenario, but very realistic. You have an after-tax NPV of close to $2 billion, 1.9 year, which corresponds to a share value of $7.38 a share. IRR of 55% and a payback of a little over a year. So not only in the base case of the economics, I mean, even in the base case, the economics are strong, but it shows you the leverage that this project has because of its size, a modest increase in the price of silver, and you get a very, very, you know, significant increase in the value of the project and the other financial metrics that go along with that. We talked about a tier 1 silver asset. So what really defines a tier 1 asset in the mining space? It's long mine life, big production, very sizable, and good costs. So here, as I mentioned, a 16-year mine life. That's not typical at all. You'll typically see 7, 8 years of mine life. In underground deposits, you'll actually see shorter mine life. They have to continue to drill out because it's expensive to drill. We have a 16-year mine life, average annual production of, again, 26 million ounces silver equivalent. In peak years, that's 35, maybe even more million ounces of silver equivalent a year, I think in several years, which makes it the largest silver mine in the world. And the average life of mine all-in sustaining costs are less than $12.50, which I'll show puts it in very good, very good position versus the other producers. Looking at capital intensity, I talked about it before, but again, fantastic NPV to CapEx ratio, both in the base case at over 3 and in the upside case close to 5, over 5. Another important point to note is that 99% of the tons in the mine plan, in the PEA mine plan, were in the measured and indicated category. So obviously the resource, I noted that the resource has 90% or so in the measured and indicated category, but specifically the PEA mine plan, which is a subset of that resource, close to 100% of the mine plan is in measured and indicated. So that means, you know, this project has been de-risked, it's been advanced, moving to the pre-feasibility study. There's a lot less risk, whereas if you had a lot of inferred, you would have to drill those up to a measured and indicated category to use them in the PFS. And then last point on this page is talking about silver exposure. Typically senior silver producers, you see here Coeur, Fresnillo, Hecla, Hochschild, and Pan American, they're in and around the 32 to 50, 52% range in terms of percent of revenue coming from silver. From Cordero, silver represents over 60% of the net revenues in the first 5 years and over 50% over the life of the mine. So that's an important metric for some who really believe in silver. They want that revenue mix to strongly support silver because, as we know, silver behaves a lot differently than other metals. When it goes, it's gone, and its share price. I mean, the metal price can actually move quite parabolically compared to other metals. So they like to look at that metric. So we fare quite well on that metric. Just wrapping up here with a couple of slides comparing Cordero to other silver producers. You'll see silver equivalent production here is plotted of several silver producers. These numbers are from 2022 estimates from BMO. You'll see if you put Cordero in there, it ranks among the top ones here in terms of ranking in line with Coeur, Hecla, First Majestic. You'll also see on the bottom here the number of mines that comes from. So obviously Coeur, Hecla, First Majestic, their total consolidated production comes from 4 mines. You would get all that kind of size of production from one mine. So it really just speaks to the size and scale again of Cordero. The other important point to note here is looking at the market cap, which is shown by the black dot. These kind of producers are trading at $3 billion or so US market cap. While you've got Discovery with Cordero here trading at around 500 million market cap US. So obviously they're producers, we're developers. They're obviously, there's a gap though, is what I wanted to point out. All we have to do is execute on this plan, de-risk the project, advance it, and there's a very obvious gap of where that value can really move up sharply. Looking at all-in sustaining costs, I've talked about it before, but racking us up against other silver producers, you see Cordero fares extremely well compared to other silver producers, among some of the best here. So again, the low strip ratio, very simple metallurgy, very good infrastructure around, the efficiencies of scale from such a large project, those all really help to drive those all-in sustaining costs down. Whereas essentially almost all of these mines that are sitting within these companies are underground mines. So obviously the sustaining capex is quite substantial to be able to, mine underground. So that definitely helps us. Looking at the sensitivities, there are a lot of numbers here, but really want to draw your attention, obviously, to the base case, which I've talked about. That's looking at $1.20 zinc and $22 silver. You see 1.2 billion. We've talked about this, and 38% IRR. If you stress test this, you look at the top left here. You're looking at $1.05 zinc, which is way below what it is now. It's close to, I think it's over $1.50. You're looking at $18 silver. You see, even in that case, you're talking about a project with over $700 million NPV. So that's close to 850 Canadian. Close to 30% IRR. So very strong economics, even when it's stress tested to the downside. And obviously, if we look at the upside, you'll see $30 silver, $1.45 zinc. Again, that's even lower than zinc currently is, but $2 billion NPV and an IRR close to 60%. So really speaks to the leverage it's got on the upside, but it also shows that on the downside, you've got some very good protection. And just the last slide to close out, really investment exposure to big silver projects is hard to find. There really aren't a lot of tier 1 silver assets out there. These show the top 10 largest undeveloped primary silver deposits. And you'll see a lot of these are sitting within bigger companies. So really your exposure to that specific silver project is obviously diluted amongst all the assets of the company, number one. Whereas Discovery is Cordero, you're paying for Cordero, you've got the full exposure to Cordero. So that's number one. Number two, a lot of these projects are actually stalled. They're in remote areas or difficult jurisdictions. So really, we're talking about a very large project with Cordero that's very doable, very executable at a very digestible, palatable capex. It will be a mine. You're getting very good exposure to it, which is extremely hard to find if you're looking for that silver exposure. So that wraps up the Discovery presentation. I'll pass it back to you guys.
Thank you, Taj. That was a great update. We do have quite a few questions here, so I'm just going to stop sharing your screen if you don't mind, and we'll get to the questions. So after pre-construction planning, how long will it take you to build and get up to commercial production?
So the high level estimate right now is when we start construction, there's two main parts of, it's essentially two mines in one. There's a heap leach operation, and then there's the main operation, which is a sulfide operation. The heap leach operation could be ready in about a year from the start of construction, which we actually plan that it'll start before the sulfide plant starts. The sulfide plant would take the better part of 18 months. So they would go in parallel, but we could basically start producing about a year after we start construction.
Wow, that's fast. Why would and I'm probably going to pronounce this, but the Pinoles let a new group acquire a property like this?
Pinoles is a large metals producer in Mexico, diversified, but they obviously do focus on silver. I mean, there's lots of projects out there in Mexico and that are owned by Canadian companies and not Pinoles. And it's this project has never, has always been, we acquired it from Levon Resources. They acquired it, but there's lots of projects out there in Mexico that Pinoles
and have all.
they don't have claim over them. They would have to then acquire them or do things like that. But yeah, they don't own all of them.
Perfect. And I'll just ask one more, Paul, before you get into your questions, because I know you have quite a few. Could you speak to management's ownership, options, warrants, and compensation?
Yeah, so from that capital structure slide, you'll see insiders and founders own about 10% of the company. So we definitely have skin in the game. What were the other points they wanted to know?
I guess compensation, warrants, options, etc.
I guess your burn rate, what they're getting at as well.
Yeah, so we have actually a very, what I would consider, considering our market cap, a very favorable burn rate. I mean, all of our numbers are out in our financials, as well as our compensations out in the management information circular. I strongly do believe that we're a lot more compensated on the success of the company rather than just high base salaries. That's always been a mentality that management, can do well if the company does well. And that's how we've tailored everything.
Excellent. Paul, did you have a question or two?
Yep. Do you have any offtake agreements that you're looking at, or have people been sniffing around for offtake agreements, or are you just going to sell your silver on the open market?
We honestly, Paul, we've been heads down getting this PBA out. We thought there was a lot of value to resurface, which we're seeing again the early days of. We've been doing well since we put out this study a couple of weeks ago in terms of share price. Hopefully silver will cooperate soon, but yep. We really had our heads down focused on that. I think now an important part of it, it's great that you brought it up, is project financing. So how is this project going to get financed? Obviously a portion would be cash we have, and so a component of equity down the road, but obviously a significant portion would be debt or potential offtake. So it's something we really will start digging into 2022. Really up till now, we've just been heads down.
Would you be standalone on the whole project, or would you consider bringing in a partner for the financing part?
I think we're pretty open to it, Paul. I think we'd always have to go to our shareholders for that discussion. But obviously, with Discovery, you're getting full exposure to Cordero. Number two, we're very well funded. Number three, the capital needed to get this into production is actually extremely palatable considering our market cap, our current cash position. So we're going to try to keep as much exposure for our shareholders as possible to Cordero. And I think this isn't a project that's a market cap, a company with a 300 million market cap has a $2 billion build. We see that. This is extremely palatable and doable. And I think we're in a very good position to be able to advance this ourselves.
Okay. Now, how significant is the zinc on your property?
The zinc is pretty significant, especially as you get into the later years of the mine life. You get some metal zonation. The early years, early 5, 6, 7, 10 years, very, very high in terms of silver and gold. And then zinc starts coming up in the later years of mine life. So life of mine, as I mentioned, silver is say 50 to 55. Zinc is probably the next highest metal. It's probably in and around 25. Lead's about 20 or so. And then gold makes up a small component of it, about 5%. So yeah, it's a pretty big contributor. And I think we hit $1.75 zinc this year. It's but it's definitely got some torque on the zinc too. Yeah.
You mentioned like you own the property outright, but are there any royalties outstanding?
There are no royalties outstanding on the property.
Excellent. That's excellent, because when you're coming into production, that's where you're giving away some of your money. The warrant situation, you're going to have a good chunk of change coming with that. If you stay at your stock price where you are right now, you were at 216, up 12 cents as we speak. Is there any force on the warrants?
Sorry?
Any force on the warrants?
Oh, no, there aren't. No, they naturally expire. There'll be this summer. Right. One is like late May, I think, and then the other one's July. So yeah, there's no force. No.
Okay, one last question I have, and then we'll wrap this up, is how big of a drill program are you going to do, and how deep do you plan to drill?
Yeah, okay, so that's a good question. So this year, to put in context, we drilled about 90,000 meters.
How many?
Rig, so one of the 90,000.
90,000.
90,000.
And so next year will be less because we've already drilled some. Basically the main pit area, the project area, the thing that would eventually become the mine is already basically drilled out to measured and indicated. So we won't need a lot of that. We're going to be doing quite a bit on the exploration side of things, and any obvious near mine expansion. There are some areas we think we can actually grow the main deposit. So I'd say we're in the middle of planning for 2022. But roughly about 50,000 meters next year, at least, I think. Maybe between 50 and 60 is what we're planning. And we'll obviously press release that in January.
Okay. And I mean, I don't know if you mentioned it. Is this going to be open pit to start?
Yeah, it's all open pit. Sorry, I just wanted to make that clear. It's an open pit.
All right.
There are some veins that are near the pit that those would be mined by underground, but they're not in the mine plan. They're not in any of the numbers we talked about. So
okay.
This is an open pit, yeah.
Taj, great presentation. You've got a great story going. We'll keep everybody up to speed on exactly where you're, when you're moving forward with everything that's taking place. Again, thanks very much. Peter, do you have any question for Taj?
No, but I find it interesting. Hi, Taj, by the way, we haven't met.
Hi.
Everything that he said, we're doing the opposite. Like Taj went old school, but we went old school. We went Pat Sheridan old school.
So, all right, everybody stick around for Peter because this.
There you go. That's a great one line to watch. Now I want to watch.
Now everyone's invested. It's wonderful.
So Taj, you can hang on in the background if you wish and listen in.
Beautiful. No, thank you guys for your time and really for everyone for watching the questions. Thank you very much.
Thanks very much, Taj. Appreciate it very, very much. All right, Peter, go ahead.
Hey guys. So I did find it interesting, Taj, because we did everything the exact opposite. Taj went traditional route. We drilled, we had a PFS, had a PEA, we got third-party reports. We're going straight to production. We have a silver property in Arizona with a 6 to 7 foot wide vein. We know where the mineralization is. So as a leadership team, we said, why waste money drilling, testing, chasing? Go get it. And this is what Pat Sheridan used to tell everybody. Don't come to me for $1 million to go chase the vein. Go mine the vein, make $10 million, put some of it back into the property. And that's what we're doing. Just outside Globe, Arizona, we have 5 former producers on a 5,000 acre property. We pay royalties on a small portion of that relative to the size of the property. It's minimal. Taj is going to be in production in a couple of years. We're on path to be in pilot production in Q1 of 2022. Again, completely different. They're doing heap leaching. We have a gravity mill being set up. It's a modular mill that makes our CEO crazy when I say this, but our mill is so simplified, even I can run it. So we have a modular process. We'll be in pilot production in Q1, and we will be in revenue as a result of that. Then we put the second mine into production, which is called the McMorris. All of you have heard about the McMorris mine, even if you don't know it, because historically, it's the source of the legend of the Lone Ranger silver bullets. We figure we'll have that in production in about 24 months. Then we have 3 other projects on that same property to look at, and we'll have to do some testing to decide which of the 3 goes into production next. So it's a pretty easy story. But then we have Idaho. Yesterday, Silver Bullet put out a press release about its Idaho property, making technical disclosure for the first time. In Idaho, we're on patented lands. We own it 100%. It's called the Washington Mine. It was in production in the 1880s and again in the 1930s. We have the historical records on it, and we have summary reports, the latest from 1981. A gentleman named Stoddard, I believe. So based on the historical reports, we purchased this property in December of 2020, took some samples, but we're just too darn busy to get around to doing anything with the samples until relatively recently. The samples came back big, so we went back into Idaho to do further sampling, and those results came out yesterday. Now, for context, silver at 1 kilogram per ton of host material is considered bonanza. Here are some of the numbers we put out yesterday. 4,350 grams, 4,780 grams, 4,740, 2,000, 2,500, 2,400, 1,300. Each of those numbers is bonanza grade, taken from in and around the old Washington mine. So we have a very exciting project in Idaho, and we will be in pilot production in Q1 down in Arizona. The only hiccup we've had so far is the global supply chain. We had 3 containers shipped from China. Bins 1 and 2 are slightly delayed. Bin 3 is somewhere off Long Beach right now. From the time it hits, it has to get landed, unloaded, and shipped to Arizona, which is a 5-hour drive. You know, if I could, I'd drive over there myself and pick it up right now. But from the time it hits the property, it's about a month until we're in pilot production. The CEO has done a great job of designing a flow plant, a process chart that allows us to be in pilot production relatively quickly. And that is the simplified version of the silver bullet mine story. Trades as TSXV.SBMI on the venture exchange. 55 million shares issued note, 29 million in escrow. Management and insiders have more than 15 million. There is no cheap paper out there. All of it, all the stock that's out there is stock that has been paid for. And you can tell from our trading that there's nobody with cheap paper banging away on a bid. There are thin asks because people aren't sellers in this story. People want to see us in pilot production in Q1. So Taj, everything that you did old school, we did completely differently. And they both work given the right projects.
Peter, like this is interesting. I mean, you're going to be like in production very shortly, so that's the most interesting part about it.
Paul, sorry, Paul. Technically, PDAC likes us to say that we're in pilot production next quarter,
okay,
and then ramp up to full production.
That I understand. Yeah. Now, could you just explain to me I guess the shell? What's, you know, like who's left in the shell? And like you just said, there's no overhang or there's no sellers out there, but is the shell, was it pretty clean, tight?
Yeah, it was very clean. It was called Pinehurst Capital 1. Post-consolidation, the free trading stock in the hands of the original IPO holders was about 1,050,000 shares. And we ate through that in day 1 and 2 and defended the bid. Their stock effectively was at 21 cents. And we're trading at 35 today.
You're trading, yeah. Cash position right now, Peter?
About $1.2 million. Should see us through to revenue. Plus, we have warrants at 30 cents, and there's some indication that they will be exercised.
Is there any force on them?
No. Actually, it's funny. When we were doing this financing, we had to raise $3 million. We wound up raising $6 million because we structured the deal well. The biggest conversation we had was around an accelerator. Nobody cared the warrant was 2 years. Nobody cared it was 50 cents, but everybody wanted to talk about an accelerator, and we decided not to have one.
Okay. You own the properties outright, Peter?
Most of them, BLM or patented lands. There's a small piece that we lease from a family in California. The annual payments are $53,000 US. What I should add is, in addition to our mill, we have our own assay lab. Now, QA/QC best practices say that once in a while we'll send samples out to a third-party lab to compare and ensure that our math is good. But we have our own assay lab, and that's really important. Picture standing, like, silver is a different beast. We're all used to gold where you can't see it or the VG is spotty. Imagine standing in front of a 6-foot wide silver vein, right? Say, well, okay, where are we going to mine today? We can take samples from that vein face and run them and have an answer the next day as to where the high-grade part of that vein is and where the low-grade part is. And we can make a mining decision based on data without waiting 12 weeks for a third-party lab.
Okay, so you don't, okay, just to clarify that point, that's for your own internal use so that you can find out what you have. It's not for putting out results of drilling.
Correct. Although, so we're not drilling. Like, we know where the vein is, so we're going to follow the veins. Okay. But 43-101, the early drafts did not provide for your own lab. The final version did, and it makes sense. In situations like this, or let's say that you're in a remote part of the world, you don't want to be shipping core 2,000 miles or shipping bags of grab samples to get tested. You can test it on your own property. It's perfectly permitted. My view of compliance, though, is that in every press release, if you use your own lab, you should disclose why you're using your own lab.
No, 100%. That was my point. Yeah, just to clarify that. Peter, can you talk a little bit about management, who you are, who everybody is, and ownership?
Sure. Like I said earlier, management has a vested interest in this. We have well over 15 million shares out of the 55 million outstanding. Our options are at 30 cents, same as the finance price. Again, there's no cheap paper out there. John Carter is our CEO from Oakville, Ontario. John is a process expert. He's the right guy for this job. He knows how to build a mill to process the good stuff out of the host rock. I don't have a clue. John's built over 100 mills in his lifetime around the world. He's the right guy for this job. Our CFO is Brian Crawford, who most of the people on this call are going to know. Brian's been the CFO to many, many companies over the years, and he's a value add CFO. He doesn't sit behind his desk and just pound his calculator. He actually adds real value and real thought to the management process. We have Eric Baylog, who's helping with the capital markets side. We have Ron Murphy, who's down at site, whose family runs a mining safety school. His family has been on and off this property since the early 1980s. So we have intense local knowledge and mining infrastructure that he brings with him. And who else is there? Oh, there's Ron Wortel, who's our QP. He's a P-Eng, and he's on the board. And, oh gosh, I forgot Berksy. Now, you all know Berks Bovaird from Montreal, Quebec. A good old Anglophone, went to Concordia, I believe. Berks is the chair at Energy Fuels. So I figure if he's good enough to be the chair of a $1.8 billion market cap company, he can certainly be the chair of Silver Bullet Mines as we grow into that. And then there's me. I've been doing this for a very long time. I'm VP Capital Markets, kind of de facto in-house counsel as needed. And I'm happy to take all questions, answer to any shareholder. As I told one gentleman last week, every shareholder owns a little piece of me. Call me anytime, Twitter me, email me. As a shareholder, you have a right of access to management. Take advantage of it.
Okay, one question just came in. When are the warrants due? Like, what's the time frame of them?
So we did a staggered financing into the private company. So the warrants come due on a staggered basis starting in late 2022. Okay,
excellent. Now, what infrastructure do you have in place?
Excellent question. We have so much infrastructure that we've been able to build out. We even expanded the septic tanks this year in anticipation of being in pilot production and having manpower on site. We have road access. We have power. We're near Globe. Globe is like Sudbury or Timmins. It exists to support the mining industry. It's a lovely place. I think Linda Carter's initially from Globe, the original and one and only Wonder Woman. But there's infrastructure available to us quite readily. And we've built on site. We have our own laydown yard. We have our own assay shack.
How big of a mill are you going to have to start? And I guess the question that goes with that is, what about the permitting process there?
It's patented lands where the mill is. So permitting has A, been achieved, and B, is not as onerous as it would be in other places. We even have a demolition permit, so we can blow up things.
So you don't need a permit. I mean, I guess, how environmentally friendly are they there?
Very ESG. In fact, I was talking to Ron Murphy last night, and it was one of the things that came up. We are a strange junior in that we have a separate committee in addition to the audit committee called the Burke. If Burks is on this call, he'll get it right, but it's along the lines of compliance and permitting committee. Okay. We have a committee dedicated to ESG, and it's something we talk about continually. Boss John likes to say we're doing things the right way, not Bay Street's way, and we're doing everything correctly.
Okay. Now, how big of a mill are you going to have to start? As you know, like your bench process, and then turning it into the real process.
So the mill that we're installing is plated at 125 tons a day. When I do my math, this is Peter, not the company, I assume it's only going to run 80% of the time. I assume 5 days a month you need repairs, maintenance, stuff happens, things break. So at 100 tons a day, I also assume 300 producing days a year. So if we use Taj's number of 12.5 bucks an ounce, silver's currently at 22. I'm not saying that that's our number. I'm just borrowing for the purpose of this illustration.
Yep.
Silver's at 22 bucks. His number's 12.5. We're making $10 an ounce US. Make an estimate as to the grade we're putting through, and then you can calculate cash flow. Okay. And we will be valued and rated as a multiple of cash flow. So the most interesting thing that's going to happen to this company is not being in production. In my mind, that's already happened. We just have to do it. What's most interesting will be the first set of financials, because they will tell you cost per ounce and grade. You can figure out cash flow. I figure we'll be valued as 6 to 7 times cash flow, plus a bump for exploration at the McMorris and the other mines, plus a bump for Idaho. And that'll get you to a number. And with 55 million shares issued note, it's not going to take a lot to get a really good number.
Okay, just to wrap this up here, I mean, you've really talked about Arizona, like where you're going to be right away. What about Idaho? Can you give us like the fast track on Idaho or? Sure.
In yesterday's press release, we broke it down into 5 parts. History, step 1, step 2, step 3, and next steps. So I'm going to skip to next steps.
Yep.
We're working on plans to reopen the Washington mine. We're in discussions with a contract miner because all of this is at surface. So what is possible is, Sophie, if you can drive a backhoe, I can drive a dump truck. We can go down to Idaho. You can use the backhoe, scrape up the stuff, put it into the backhoe. We drive down the road to the mill who will custom mill it for us. That's a high margin, low risk proposition. No decision has been made on it, but we are in discussions about it. And Sophie, I hope you can drive a backhoe. It would be a fun time in Idaho.
I can't, but I would really love that. That's on my bucket list of things to do. So
I can.
Well, good. Well, I can drive a fork truck too from my days at Kid Creek Mines. So Paul, come with me.
So real quick, we did get another question that just came in. What will you do with the revenue generated? What is the bigger picture?
Part of that, of course, depends upon how much revenue comes in. We have to pay corporate, and we're fairly cheap. As Paul knows, he tries to get his invoices paid. I stretch them out as long as I possibly can. But our current projections are that we will be able to reinvest into the projects while still sitting on a cash hoard. And those are internal projections. So we can develop the McMorris, we can develop the other mines that are there, and we can develop Idaho without putting the company at risk. I've done internal projections with John and with Brian as to what we think our sensitivity points are. And in my opinion, speaking only as a dumb lawyer, what do I know? We have a lot of room to maneuver.
Okay. Got to bring this up. COVID is back with us, and it's getting more aggressive. Do you have enough boots on the ground there to get things going?
Yes,
because I think travel restrictions are going to be a big part of, starting the new year.
Agreed. The board of directors has approved a policy about COVID for the entire company. 1, if you work for us, you must be fully vaccinated. That's whether you're a contractor, an employee, a director, an officer. 2, at all of our job sites, you must take all reasonable steps to make sure that anybody who comes on site is doubly vaccinated. The policy does provide for an application to management for an exemption from that, and we will deal with those as they arrive. Our theory is get your damn shots.
Yep. All right. One final question. You have how much cash do you have on hand?
About $1.2 million.
And how far will that take you? I mean,
based on our current projections, into production.
Okay, so that's an excellent point, because you're not coming back to the market for like for money.
No, Paul. When we structured this originally in the summer of 2020, with the help of quite a few people, had some input into this, including Zach Goldenberg. We decided to undervalue the asset, and I know that sounds stupid, and everybody always says it. But the fact I had to raise $3 million and the team raised a little over 6.1 tells you that we actually did it.
Yep.
We carved back a little bit to make sure this was the one and only financing that this company would ever be forced to do. If we choose to do a financing in the future, it's because we choose it, not because we're forced to do it. So you know it'll be on good terms that defend the Treasury.
Gotcha. Okay, Peter, thank you so much. I mean, this is a great story. Taj, I know you're still on there, so thank you very much to you again. Thanks to everyone for attending. I'll mention COVID again. Please be safe out there. Be careful. It's, you know, it's not going away for a while. Just do what you have to do to contain it, to be careful, be safe. Enjoy your holidays with family if you can. Go
Taj,
ahead.
we're planning a site visit as soon as the mill starts getting sampled and bin 3 arrives. If you'd like to come up for a look, you're more than welcome.
Perfect. Thanks, Peter.
Anyway, thanks to everyone that was on the call. We'll keep you posted on both companies coming into the new year. Enjoy your holidays, everyone. And thanks very much for what you've done for us this year by attending and everything else. Take care, everyone.